You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in the world of vol? Well, let's find out together, shall we? It is time once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com, a.k.a. the network that broke Spotify this week. Happy to see Spotify has fixed it. We had to cut our available catalog in half down to about 3,000 shows. Otherwise, Spotify couldn't handle. They can handle Rogan. They can't handle what we're throwing at them. But that said, if you want to get the full kit and caboodle, all 6,000, of course, you know it's there on the website, on our mobile app. Always there for you. 17 and a half years worth of, shall we say, options goodness over there. If you're saying to yourself, man, that voice sounds familiar, it's probably because you were just listening to me, because you're probably in the live and you heard our early episode of Options Oddities. I'm hopping on a plane in a little bit, listeners. So we need to do stuff early today, and Oddities coming in hot and early, which was fun. If you want to check that out for yourselves, only one place to go. Same website, just go /pro this time. You can get access to all the fun pro goodness over there, including Options Oddities, which usually follows this show, but today preceded it, which makes it even more fun as we go around the horn and see who's joining us on the old Volatility Views program today. First, to the Southern Volatility Mecca we go, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to ye old program, sir.
Hey, Mark, good to be here. Happy Friday. Excited to be talking some volatility because it's been a weird day.
It's been a weird one. Yes, all sorts of weirdness afoot out there in the markets this week. Also joining us this week, beaming in from the hinterlands of Chicago when he's not holding court at the Kelley School of Business, corrupting young minds in the worlds of derivatives for future generations. He is also known as the once and future Dr. VSTOXX these days. Mr. Russell Rhoads, welcome back to the show, sir.
Something more evil than Dr. VSTOXX. I'm really shooting for some. I haven't spent enough time, meditating and coming up with a better name that could mix all kinds of volatility stuff in there. But as always, I am happy to be here.
Russell, is it true that you taught Modest Basilius everything he knows about basketball?
Oh, absolutely. That's one of my roles.
Just put your pinkies to your face, sir, and then do the Dr. Evil, and then you'll be perfect. It'll sound perfectly evil when you say VSTOXX. It'll be good. Speaking of VSTOXX, holding down the Eurex hot seat this week, we have a newcomer to the program and indeed to the network. He is Matt Riley on the Equity and Index Sales Desk over there at Eurex. Matt, welcome to the Volatility Views program.
Thank you very much, sir. Very happy to be here.
And Matt, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a bit of an overview of your background in the world of derivatives, as well as what it is you do day to day over there at Eurex.
Certainly. So I had the usual tour of sell-side sales desks when I started off as always been in equity derivatives, started up single stock option sales, worked for Dresdner Bank when that German bank still existed. Moved from there to Morgan Stanley, where I spent a little while, and then after a brief stop at Jefferies, have landed at the exchange where I have been for the last 6 years, basically negotiating and talking to the buy side in Europe about things we plan to do, things we plan to change, and making sure that what we do makes sense.
A little bit of action over in those European waters. We'll get to all that fun in a bit, listeners, because it is time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we do just that. We review the week that was, and indeed still is, from a vol trading and trending and analysis and all sorts of unusual activity perspectives. And coming off an interesting, some might say an inauspicious evening for just the nation as a whole. You might be forgiven for expecting us to come in today and just smack in the bid on everything you could find, because the prospect's not looking great. But that said, listeners, we weren't. We were rallying fairly aggressively coming out of the gate this morning. S&P got up to about almost 55 and a quarter before now kind of giving up that ghost, hanging out pretty close to unched. The NASDAQ similarly rallying hard out of the gate, now actually ticking red. The Dow up about 0.1%. So it seems like we are poised to be in that turnaround phase of giving up the ghost. Or, of course, this could just be the head fake, and then we rally a full percent by the end of the day. You never know with these markets. Of course, we are heading into a truncated holiday week next week. Volume this week, I think, to put it mildly, has been light. We were just talking on the Options Oddity show. It was a challenge to find any trades worth analyzing this week on oddities. It seems like everyone's already heading for the hills. I mean, I'm leaving right after this show. Everyone's traveling next week. So yeah, a lot going on. Not a lot of people slinging a lot of size out there, which could also be what's attributing to these moves out here, a little bit of thin markets. All this a long way around to saying VIX, when we kicked off the show right around 12:35, that puts it down about 2/3 of a point from where it was this time last week. VVIX also coming in, heading into the truncated holiday week, which is understandable, at about a 79, down 5 points. Maybe any last vestiges of hope for this were in the debate last night, and once the event is done, they're just come in for a vol. So a lot of interesting stuff to talk about. Matt, as our guest, we will start with you. We'll get to all the interesting European fun in a second in the international vol review, but right now, what's catching your eye on the domestic volatility front, sir? Matt, can you hear me there, sir?
Oh, sorry, my apologies. As I said, really here to talk about the European stuff. I must admit, I'm not.
Yeah, Mark, you confused him because when you say domestic, he's thinking Europe, not.
That is true. Domestic for us red, white, and blue flag waving folks.
Don't be so U.S. centric, Longo.
Yeah. Matt, you guys had a prime minister debate, didn't you?
We did.
We had a presidential, but you guys had one as well, right?
We did indeed, which was it was different, should we say? And younger minds. I'm not saying that the ideas are very different in a way from the directions that are coming through, but we did indeed have something of a debate over here.
All right, allow me to clarify then. What's catching your eye on the, let's say, S&P 500 vol, the VIX front here in the U.S. before we go overseas?
I mean, for us, everything's relative, right? I mean, you guys are the big brother that we tend to compare ourselves to. So obviously what's interesting for us is quite how much the difference between the volatility markets in Europe and the States are, as you were saying, but the way you guys' fundamental equity markets are going, it's like you're aware that there's something weird going on. There's an election coming. I guess your guys' election is obviously somewhat further away in November. For us, it's much more in our faces. We've got France, we've got the UK. These things are happening over the next 2 weeks. And so our vol is obviously moving. You look at the VIX spread to the V2X, which is, that's the biggest professional trade out there that drives a lot of our volumes from the hedge fund community and the prop communities, guys playing that spread between the two. And what's surprising to us in a way is how much we're moving and you're not yet. There's obviously a lot of talk about what will happen. Reading newspapers about whether there's going to be a change of the democratic choice. But that's that, as I say, for us, that's further down the line. For us, what's confronting us is what's happening. We got the first round of the French elections coming up. We got the UK elections coming up, and we're wondering what that means for the future direction of Europe versus the US. I mean, something, on a more fundamental background. I mean, as a UK resident, when we look at our stock exchange, something that's truly slightly terrifying is the loss of some of the large tech stocks that we're having to the States. And you wonder what that means for future directions of volatility, and also for the composition of the European markets. We have some great fundamental companies that are here. Our internal market guys at SVIX, who are a sister company within Deutsche Börse Group, always like to kind of wave the flag for the fundamental companies that we have who are actually real economy countries. But when it comes to tech, man, it's the States, right? We're losing Arm. We've got some other of our fintech companies that previously would have considered a London listing who are now looking at the States, and that makes the volatility future for somewhat different. If the growth is all with you guys, then it kind of makes us wonder what we're left with.
You just got to whisper those two magic letters of AI there, Matt, and everyone will be flocking to your shore.
Exactly.
I don't know why every stock on the planet doesn't just say AI. I don't care if you make barbecue sauce, blue jeans, AI. It's AI across the board. You're up 20% the next day. I don't know why everyone isn't doing it. Seems like a pretty easy recipe to me. All right, let's keep rolling. Let's go out to the southern volatility mecca, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian. Mr. Meatball, sir, a weird week, kind of watching vol come in a little bit here. Weird movements. The market's mostly kind of treading water this week. We did have the Fed's number, the Fed's preferred, PCE number today as well, coming in pretty much in line with expectations. And then a whole heck of a lot of nothing pretty much after that, sir. What's catching your eye?
Yeah, we really blew out of the gate, and then they sold it right back down. It was really odd. I thought we were going to finally get that clean break above 5,500. We've never closed above it, and they took it straight away. The stocks that had strength this morning got sold. Tesla was up 6. It's now down. Amazon was over $200. It's down. Nvidia was up $3. It's down. So kind of across the board, we see, some pretty decent, if we close here, it's going to be another super inside day, close to close. But the intraday action today speaks to something different. Yesterday, we saw, we actually broke the news on Option Block that Chewy blew higher because Roaring Kitty posted a picture of a dog. And the fact that and the fact that can cause a stock to go up $12 tells me exactly everything I need to know about how secure our markets are. Looking at the individual ETFs and what's happening, seeing some strength out of XLK, just not from the usual suspects. And energy is having a decent day. Chevron looks strong, and the banking sector looks pretty good. And KRE mid-cap banks looking very strong today. And that is my kind of what I'm seeing.
It wasn't until they posted the picture of the dog, that's when you realized our markets were crazy cakes. Before then, all these years previously, you're like, oh, these are normal markets. But then the picture of the dog came.
Well, I'm just excited that we're going to decide the presidential election over who scores a lower score in golf at TPC.
Yes, there are so many good takeaways from that event, but I'm trying not to sully the waters here for our listeners. They want a respite. They want to talk about some vol, so we shall deliver that for you, listeners. As we go on out now to the hinterlands of Chicago, Mr. Rhoads, I don't want to go too deep into it, but you were looking forward to maybe a little bit of vol coming out of the debate last night. We got to move. I'm not sure if we're getting a lot of vol net out of it right now. Mostly just coming back down. But anything catching your eye on a weird vol week, sir?
Yeah, absolutely. And I now I'm going to be self-promotional for 10 seconds. I took a look at that October-November spread in the VIX futures curve, and it's down to, it was as low as 75 cents recently. That thing has been, I didn't realize that it has just been grinding lower like that. And I felt like, and I included this in the piece that I put up. We held at like about a 2-point premium back in 2020 for the whole summer. And then it started to fall down, and eventually October went to a discount relative to November. So I thought I had time to put that on. Now I'm, so fixated and so upset about being short the S&P 500 that I kind of missed that trade.
Is our chat bringing up bad memories for you, sir?
Oh, I know. I'm in the chat today.
I see them asking about that there. Yes, they remember. Our chat has a long memory, sir. They remember all things. They know what you're up to behind the scenes. They know what you have on better than you do. So, yes, I've learned that the hard way. Trust me. All right, let's keep on rolling. You have invoked the futures, so we'll head out there next, listeners. And, you could be forgiven, Mr. Rhoads, for thinking you had a little bit more time. If anything, the events of last night now throwing into doubt what the heck the ballot's even going to look like come election time. You'd think it might actually, give that spread a little bit of extra life, but no, you're right. The kind of coming for it 18 even right now on that OCC future. It is not the highest on the board now. If you go out to February, though, February and October have always been neck and neck, which is kind of interesting in and of itself. 18-10 on the Feb future when we kicked off the show, 18 even on the October future. July at a whopping 1380. So you're talking 4.2 points in that spread between July and going out to October. July future obviously coming down, everything coming down this week. July future down about 0.6 of a point, and the AUG future down about a little over half a point, almost the same amount out there. Mr. Rhoads, you kind of just broke it down for us, which was catching your eye out there on the volatility surface. But anything else catching your eye in the world of the VIX futures this week, sir?
No, nothing other than longer out in the curve. I do. I did note what you just said about February and March, and I just you got to be so cautious if you use the word Biden or Trump. But so this is not an endorsement. It's not what I really. I'm wondering if February and March are kind of at a premium because they think the bad man might take over.
We're gonna get a repeat of what we saw a few years ago. Let's hope not.
Yeah.
For sanity's sake.
Who knows? But that's that. I think that's part of the guess.
It is strange. February having to bid though. That's kind of late. I mean, then you're talking about the chaos really spilling over, into March at that point. So it's a late bid for vol, but it has been kind of catching my eye for a while. That bid early in the year next year, but not when you maybe would expect it. Not around all the January fun, but even later. So. Yeah, weird stuff afoot out there on the vol surface. Mr. Meatball, same question for you, sir. What's catching your eye on a weird VIX curve this week, sir?
Yeah, it's been interesting. The term structure is not pricing in like we're going to get a lot of action anytime soon. But yeah, Russell, I was noticing, that spread's tightened about 85 cents. And, for some reason, to me, August looks a little bit cheap relative to July and September. I kind of like sell July, buy to August, sell a Sep. August has been traditionally not a great month for markets, so it might be a really fun one to trade.
Yeah, I didn't expect to be coming on the show today and say, hey, maybe it's too late for that trade, but that's the markets. I mean, there's still time. Obviously, anything can happen. There's still some juice there, but yeah, it's fascinating stuff. Speaking of fascinating stuff, this divergence, as we were alluding to earlier, between what's going on our domestic front, the red, white, and blue domestic front, and then overseas on their domestic front. Very interesting, very stark contrast. Let's get to it now with a little bit of the old international volatility review.
It's time to explore what's happening in the volatility market beyond our shores. It's time for the International Volatility Review. The International Volatility segment is brought to you by Eurex, home of EuroSTOXX, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobobble, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European volatility benchmark, at www.eurex.com/VSTOXX.
All right, listeners, let's get into it. A little bit of the old international volatility review. And man, there is some vol to talk about over there across the pond, as they say. You know, one of the big questions we had on the show last week, there was this stark premium out there on VSTOXX. We were in the 19, almost 20 handle not too long ago. Last week, it had come in a little bit, down to about a 1760. And the question was whether it would continue to come in or whether it would catch a little bit of a bid. I think I was leaning on the former end of that equation. And surprise, nope. Coming in this week, VSTOXX closing today 1842, so gaining a little over 0.8 again on the week. So firming up again with all their own election brouhaha going on over there. Remember, we're a decent ways away now from the 52-week low, which is 1212. They set it back in December of last year, even though we did kiss it again, very close to it again back in March before this latest leg up. And the high 23 1/3 that came right around Halloween of last year. So we're hanging out pretty close to the upper middle of that range right now, but a lot to unpack. Matt, I know you're not talking to guys like us. You're out there, as you said, talking to a lot of the folks over there in the European vol community. Certainly interesting times on that front. What are you hearing? What's coming across your desk? What's catching your eye out there in the international vol this week, sir?
I think, as you say, I mean, obviously driven by elections. I mean, the shift to the populist right in Europe and what that actually means for the fundamental economies driving the fundamental companies driving the economy over here. I mean, that's the big question. It feels a bit like dominoes, right? I mean, we had Italy had their lurch to the right when they voted in 2022 for Meloni, who is a populist right winger as it is. She's played quite nicely with the establishment so far. I guess when you look at the polling results that's coming out of France, they have their first round on Sunday. People concerned that Mr. Macron, the current president, is going to end up having it rarely happens in France. Normally, if you would have a president and a prime minister from the same, if not the same party, then similar backgrounds. And if they do indeed lurch to the right, then we end up with a rather difficult place where we'll have kind of a very right-wing prime minister having to work with Mr. Macron, who's very much a centrist president. That's driving volatility generally as across the markets, and particularly within France. I mean, if you look, going back to, as you mentioned, on the bonds, if you look at the spreads, it's all the same currency, right? It's the euro. So theoretically, equivalent quality countries should be trading at exactly pretty much the same yields. And we're back through what's considered the pain/fear threshold of the French government bonds having 80 basis points premium to German government bonds. That's a clear sign of distress, and that's feeding through into the volatility market. Now, obviously, the V2X, as you said, it's off the highs where it was, because at the moment this is considered a French problem, but there is people worrying about what happens next going forward as we get more European elections, given that we have already had a slight lurch to the right in Italy. Within the European Parliament, that's not considered a big player in many ways because it has so many different factions within the parliament, but it now feels like that if the French right wing can get in, they could ally with the Italians, and it's kind of a funny right wing, right? They're a very populist right wing. They like to believe that everyone, no matter how high the average life expectancies go, that everyone can still retire at the same age that they can do now, and it's they're feeding the machine of the whole expansion of the debt complex in Europe, and you do wonder at what time that starts to pop and what happens next within the securities markets generally. Now, obviously, we hope that won't happen. Whilst the polling at the moment is very high for the far-right party, it does often happen, particularly in France, that people as kind of a protest vote, when they're canvassed by pollers, they will actually indicate something different from what they actually vote on the day. So we're still hoping that we'll end up with a rather more centrist government in France, which would calm everything down and bring that spread between the French government bonds and the German government bonds back in. And that would obviously bring the VSTOXX and the European volatility curve lower as well. Whether that happens, well, we'll be finding that out over the next couple of weeks. And obviously here, within my native country of the United Kingdom, we also have elections. I mean, that's considered far less controversial in that the current incumbent Conservatives have managed to upset enough people that this election will not be so much won as lost, and they are going to lose it. And the Labour, the kind of soft left-wing government will be coming in. Why that's interesting for Europe, obviously post the 2016 Brexit, we are no longer in the EU. We kind of play nicely with them at times and not so nicely with them at other times. Now, but obviously if we get the socialist government who came in, who have distanced themselves from the delivery of the Brexit that we went through in 2016, then there is a hope that we may realign us back in at this point, that there would be a clear driver to reestablishing some more porous trade borders, which would be good for the European economy overall. And so we're in this kind of slightly strange stage of everyone looking to France, hoping that they don't actually play the wild card, everyone looking to the UK and hoping that that means that the election will bring the UK a bit closer back into the European Union fold. But at the same time, it's, as you say, there is volatility out there, and people wonder what happens, obviously, from the professional trader's point of view. As we said, that VSTOXX versus VIX, that is the favorite trade for a lot of people, though it is looking wide at the moment. And does that come in, whether that's because Europe calms down or as you guys go in towards your election, do we see more volatility on your side of the pond? I think that's very much what's occupying minds at the moment.
Interesting. Yeah, a lot of analysis on that spread. It's certainly been flummoxing me on our crystal ball every week. Sounds like it's been flummoxing Mr. Dr. VSTOXX there as well. We'll get to that in a second. But you said you're not talking to us. You're on the horn with a lot of the customers and clients out there. I'm curious, so what are they up to out there? What are they looking at? I mean, we talked not that long ago on the show leading into your elections about some bullish risk reversals going up in VSTOXX. So it seemed like some folks had an eye towards some higher vol. It seems like that worked out. Is it something analogous right now? Is it similar to what we're seeing in VIX, or folks just coming in and loading up on the upside in VSTOXX? What kind of trades are you seeing out there?
Certainly we are seeing play in the upside as we go forward through the elections and also through the summer. I think there are kind of, it's an interesting thing because our volumes are great at the moment, right? I mean, we're kind of the year on year. Obviously, we're very high. The VSTOXX options are trading a lot at the moment, and we were getting people who may have been on the sidelines for a while, who are coming internationally, who are coming back in, partly because there's an interesting European story, but also because the liquidity is available at the moment. You can do what you can get stuff done out there. I think we're certainly seeing people who may have previously in the last year or so have been protecting more kind of on the protecting levels from the real asset, with the real money managers, the real asset guys protecting levels through puts. So now looking at the volatility trade as a more interesting expression. They're certainly looking at upside. That tends to be more call spreads. We're also seeing some, what we're not seeing so much is the sellers of vol. We're not seeing so much at the moment. It's very much a one-way market, definitely a buyer's market out there with the European sell side, the banks and the market makers trying to feed that market, which does make you think that if there were to be a break higher, that could start to move quite quickly.
Mr. Rhoads, same question for you. Obviously, it's been a fascinating time out there in VSTOXX. So if you're wringing your hands saying, man, this gently drifting lower VIX is for the birds, VSTOXX continues to deliver out there. In fact, looking at our chat right now, we got the queen, one of our, I won't say premier, but one of our better guessers on the crystal ball front. She says, I'm really enjoying the international volatility analysis on the show. More going on than just inside our shoreline. That is indeed the case. Something we wanted to incorporate on the show for a long time, and certainly a lot more going on out there these days than what we're seeing here in the pre-holiday week. But Mr. Rhoads, you've been crunching the numbers, looking at the data, looking at this spread. You've been even trading it a little bit of late. What's been catching your eye out there in VSTOXX land this week, sir?
VSTOXX, we've got, I think, as we've mentioned, we've got an election coming up this weekend that might turn a few heads, et cetera. And there are some trades around it. If you take a look at the term structure right now, you've got spot VSTOXX, I believe, around 18. As I was saying that, I bumped my screen and lost the numbers that I had in front of me. So yeah, spots up around 1830. The July contract, I'm seeing at 16, which that's the kind of stuff that you see, before some sort of known unknown. But it looks to me right now like the market's pricing in that we'll see a drop in volatility next week after the French election gets behind us. Now, if you had looked at the VSTOXX curve before Brexit, it told you the same thing and it was wrong. So we'll see how things turn out with respect to that. So that's one thing. Another, I've come across a trade looking for a spike, and I came across a trade looking for volatility to go down after this weekend. And I'm totally assuming the way these are structured that that's what they're focused on. One of them was I don't know how often people talk about these measured move butterflies. They are probably my least favorite type of trade. But I did come across one where somebody's looking for VSTOXX to work its way up into maybe the low 20s, and they're using the July futures on this one. They bought the 20s and bought the 28s. They paid, these are the July 20s and the July 28s. They paid 75 cents for the 20s and paid 25 cents for the 28s. And then they sold twice as many, which creates the fly for you. They sold twice as many of the 24s at 37.5 cents each. So this trade cost them a quarter, and does very well if we get a move up to, I mean, I guess a perfect move would be 24, but could easily return 50, 75 cents very quickly if we get some sort of volatility spike early next week. They did put this trade on Monday, so I don't know if they were hoping for something before the weekend, but it looks like they've still got this trade on. And then another one that's I always like to look at contrasting trades because that's what makes a market. Somebody did a ratio put spread where they bought one of the August 14 puts and they sold two of the August 12.5 puts. They were able to do that trade for 12.5 cents. So they just got to get VSTOXX down to what, 13.875 or lower to do well on that trade. And I don't know all the intricacies of all the different elections that are going on in that part of the world, but I would assume that most of that volatility or most of that risk is going to be behind us by the middle of August. And that's what they were shooting for here.
Interesting stuff, as always, Mr. Rhoads. Speaking of interesting stuff, interesting one just coming through our chat. A question I have to admit I didn't ponder. I don't see why you would, but it's an interesting question nonetheless, Matt. Maybe you can give us a definitive answer. Our chat wants to know if they trade VSTOXX, are they going to get a K1? Of course, a lot of people in the vol space are used to the shock of a K1 landing on their desk around tax time, usually because a lot of these ETPs we talk about are structured as partnerships, so they're passing through some of those profits and that revenue to you, hence you get that K1. I don't see a reason why you get a K1 for VSTOXX, but Matt, maybe you can answer that definitively for our chat, sir. Are they going to get a K1 if they sling some VSTOXX, sir?
Tax is always a dark art for myself, but from my humble opinion, as long as you're just, as you say, as long as you're not trading something like an ETP or an ETC, which is wrapping up those returns, as far as I'm concerned, VSTOXX futures and options are CFTC approved. As long as you're purely trading the actual financial instrument and not the financial instrument wrapped up into a fund, then I believe you're okay, but I would get shot by my compliance if I were to write that down.
Yes, obviously none of us here are tax advisors, listeners, but I don't see any scenario. It's not a partnership. It's not any sort of entity. You're just buying, as you said, the underlying instrument. So there's no entity there that would issue a K1. But nonetheless, it's a good question. That's why I love sometimes when our chat throws us the curveball. That's what you folks are for. Is there a curve going on out there in VIX land today? I guess we'll find out, listeners, as we head on out there. Is it a banger day out there? Well, it was kind of sleepy. It seems like things are picking up a little bit now that we're taking a little bit of a turn to the dark side, listeners. VIX was hanging out south of 250,000 contracts for a while. Starting to spark to life now, 387,000 contracts. It's not explosive. It's not 1 million or anywhere close, really, but also heading into a truncated holiday week, it's respectable. In terms of ADV, they are coming for that. Then again, you could probably guess that we were already looking pretty frothy on the volume front heading into a holiday week. They're going to come for it, and it's down almost 100,000 contracts to 745,000. Still respectable, but obviously a pale shadow of what it was not too long ago when it was north of 900K. Looking like it was going to threaten 1 million contracts a day. In terms of size positions, what is open for size out there in VIX land this week? Let's find out, shall we, listeners? Again, we're playing that Where's Waldo? Only one put to be found. Can you guess what number it's coming in, listeners? Number 10, that's not it. That's 188,000 of the July 22s. Number 9, $1.93 of the AUG 17, so still no Waldo. Number 8, I think we found him, 198,000 of the AUG 15 puts. Again, the first and only put in our top 10. I don't know what's going to take to have a put break in. Obviously, structurally, it's challenging now. We're hanging out at a 12 and change in the cash. Not a ton of strikes for the downside, so that's obviously gumming up the works, but it is fascinating to see this mostly constant vol erosion and no puts to be found in terms of size OI. Number 7, 214 of the July 19s. Number 6, we're right back at it, 218,000 of the AUG 47 halves. Number 5, 220,000 of the DEES 42 halves. Number 4, $250,000 of the AUG 25s. Number 3, 300K exactly of the July 15s. Dare I say it, the most reasonable strike on this board today. Number 2, 319,000 of the July 18s. And the big dog still, 472,000, so almost 500,000 of the July 20s. You like those? Listen, you like any of those? You open on any of those strikes? I'm curious. Hit us up, let us know, because it is time now, listeners, for the song So Nice we have to play it twice. It is time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, Mr. Rhoads, I know it was an explosive volume week, so I have budgeted for you the remainder of the show, all 22 minutes, to hold court on all things weekly paper. Have at it, sir. The floor is yours.
There's one day this week where there were no weeklies traded at all. This was by far the quietest week we've seen, and you would sort of expect that. We've got kind of a holiday split week next week, and and if you want to put something on based on the employment number that we're going to get next Friday. And I assume it's still coming out next Friday, that you would, that you've got a little time, but I've already talked about waiting until you put the trade on and trying to time it better, and how that didn't work for me once. So maybe people shouldn't listen to me on that one. As far as trades go, just a couple of interest. One I hate, one I love. That's really what I'm going to start doing here. And I apologize to anybody that's listening if you did the one that I hate. Yesterday, somebody came in and sold 200 of the July 3rd 14.5 calls and bought 200 of the July 3rd 16 calls, and they got a credit of a nickel. So you are risking, and you can tell by my tone, I don't like this one. You're getting a nickel and you're risking $1.45, and I just, having lived through Lehman and all that other stuff and showing my age, I know what happens when the ever-present weekend risk comes true, and I just would hate to be trying to. This is totally picking up nickels in front of a steamroller. How's that for really technical analysis on this one? So just not a real fan of picking up a nickel that way. I don't quite understand. And it's not an exiting trade because the size doesn't match up with open interest. Today, I kind of like this trade a bit. We've seen this trade when I've been talking about weeklies earlier, and we've got a big buyer of the VIX July 3rd 13 puts. They paid between 21 cents and 23 cents for those today, when VIX was around 12.26. That's like a 50-cent buffer right there. If VIX doesn't move at all and they hold it into expiration, they would do fairly well with that trade, because those options would be worth about 74 cents. I like the trade an awful lot. So I actually copied it in a roundabout way. I actually went in and I bought 5 of the VIX July 3rd 13.5 puts for 50 cents. I didn't want to fully copy that trade, and actually the implied vol, because they've had so much buying in those 13 puts that they started to the offer side had been pulled up so much. I felt like I needed to look at another strike. If we come in on Monday and VIX is down a lot and I can catch a decent bid in maybe the 12.5 puts, I might consider just selling some of those and holding into expiration. Again, July 3rd coming in the morning, the day before holiday, I could understand trying to play something into expiration like this.
Let's see what else we're seeing playing out here this week in VIX. And like we said, Kind of a light week, listeners. Today, 387,000 on pace, actually, to be one of the busier days of this week. So that tells you kind of what we have in store for us out here this week. 387 right now. The big dog, listeners, 72,000 of the Nove 40s. They went up in one huge block of 70,500 for 49 cents. Going up late. Looks like it's our old friend Synthetic versus the SEP 30s versus the Nove 40s. 47,000 for number 2 of the SEP 30s have traded today. Wouldn't be surprised if maybe they're doing a little bit of roll action out there because there already is some size open on that strike. Clearly opening though on the Nove 40s, and it's all against that weird Synthetic on the 17 strike this time. They did that about 10,000 times. So again, ratio funky, and that's kind of what we come to expect in VIX land right now. Number 3, 36,000 of the July 15s and 34,000 for number 4 of the July 14s. Looks like that vertical went up today as well. Looks like it went up for 21 cents. There's size OI on both strikes, so hard to tell if they're opening or rolling. 21 cents, though, for the July 14-15 vertical. Would you like that as a buy, listeners? Would you be a seller? I'm curious. Let us know what your thoughts are on that. And then rounding out the top 10 today is the other half of that Synthetic. The 17 puts about 10,000 times. Again, this thing is, without this trade, we'd really have a quiet week out there because this has been kind of the only game in town for a while. That and the 1x5 to the upside. Yesterday, kind of similarly anemic paper, 561 on the tape. The big dog yesterday, AUG 24 is coming in 42,000 times. That was opening, so maybe we got a little bit of upside rolling them bones. Number 2, 40,000 as well of the July 22s. So could be some rolling action there. I'll have to go dig and see if they went up around the same time. Number 3, 40,000 of the Nove 37s. So we're starting to get more Nove upside filtering into the list. Number 4, 36,000 of the Jan 26s, and rounding out the top 5 on a kind of shrug your shoulders Thursday, 31,000 of the July 27s. Wednesday, 579 on the tape. So again, we're not talking any real bangers here. The big dog, 60,000 exactly of the D's 39s, and those bad boys are opening as well. So we're starting to get some interesting strikes. So I like them better at least than the 47 halves that seem to dominate the tape for forever. Number 2, 35,000 of the D's 45. So here we go, right back to some of those fun strikes. Number 3, 26,000 of the July 14s. Number 4, 21,000 of the SEP 19s. Interesting. And number 5, 20,000. Oh, here we go again. OX 65s. Maybe Matt was coming to play. These are some of the ones we were talking about before. We were talking about them in August earlier this week. We had a flash poll. We'll get to that in a little bit. They went up on Monday. Tuesday, again, the light day of the week, 302,000, the big dog, such as it was. 23,000 of the OC 37s, followed by number 2, 18,000 of the July 20s. Number 3, 18,000 as well, the July 23s. So it looks like some more July vertical action. Number 4, 18,000 of the SEP 17s, and rounding out the top 5, 14,000 of the Nove 35. So again, that trickle of Nove upside starting to percolate. And then Monday, 414,000. I said the big dog, July 65s, 63,000 of those bad boys going up. They went up for 4 cents. That was all opening. It was part of one of our ratio friends out here. 47,000 of the July 26s out here as well. 26,000 for number 3 of the AUG 16 puts. Number 4, 12,000 of the July 15 puts, and rounding out the top 5 on a pretty light Monday, 12,000 of the D's 20s. We did ask you folks if you like that trade. 63,000 of the July, what were they, 65s for 4 cents. You know, obviously these are hedges, these are ratios, but on their own, we've had Matt on the show a bunch of times on the network kind of arguing for the utility for some of these quote-unquote garbage VIX calls, that they hold their value better than you think, and they pop a little bit better. You don't need, obviously, a run to 65. You could run only a few strikes and see a little bit of a pop from the skew on these calls. So he's argued for some utility for them, and 59.3% of you agreed. You said junk VIX calls can pop on occasion. 22.2% said it's a complete waste of capital. I certainly see that as well. 14.8% of you say you don't care, it's just a hedge. And 3.7% say you prefer it as a back spread. That's the way I prefer it as well, but only about 4% of you go in that way, which is kind of interesting. Let's go around the horn now, see what everybody thought out there. Mr. Meatball, as we said, not exactly a rock'em sock'em robots week. Anything catching your eye on the VIX options front this week, sir?
Yeah, to the 26th, there was some action with some December 39s going up, and July, there was a big October spread that went up. they did you were talking about this, the 50s, the 55s, the 60s, and the 65s. Actually, it was the 45s, 47s, 50s, 55s, 60s, 65s, all in one trade. Kind of interesting. Maybe a risk management play. That was it. That was on Wednesday. Looking to see what some of the action was. He had a November call buyer on Thursday. They bought the 37 calls. Some July 22s. Looks like they got they got traded a little, and some little bit of August. Today, big seller of the SEP 30 calls. Gotta love it. Versus a bunch of November. So they're rolling out their risk from September out to November. Pretty interesting. But yeah, those are the things that caught my eye.
I kind of thought they were rolling on that one. That does seem to be the case. Mr. Rhoads, as you look beyond the weeklies, anything catching your eye in the rest of the VIX options, sir?
Yeah. Go back to, was it the 65 calls you guys were talking about? Because now that I'm not at SIBO, I can say things that I probably wouldn't have said in the past. And this goes along with the trade I talked about a couple of minutes ago, where I bought some of the 13s instead of the 12.5s, the 13.5s, because people were trading a bunch of the 13s. My issue with buying a 65 strike call in the VIX complex and hoping that VIX goes to 35 or 40 or so, and hoping that the bid goes up on those 65s. Those market makers know that you've got a position you're thinking about getting out of at that time, and that's why I would try to avoid a trade like that. You might be right across the board, and then be very disappointed at the spread and a low bid for the options when you think it's time to get out of them. So. And that was part of the reason that I avoided where somebody was buying a bunch of the 13 puts. I decided to choose another strike. I didn't like the entry price, but also I think if VIX is down an awful lot Monday or Tuesday, you're not going to see a very attractive bid on those 13 puts. So, and Mark, I mean, you two, the Marks, both of you have a lot more floor experience than I do, and my only floor experience is the Eurodollars, which is slightly different. I would assume, as having sat on the floor in the past, you can either debunk what I'm saying or agree with it. Either way.
No, we used to keep databases of all these sizes, especially if you're doing 65,000, someone's going to know. If you're doing your 10 and 20 lots in the audience, yeah, you're okay. But if you're doing 65,000, yeah, they're going to know.
We'd have a notebook.
Yeah. You had to do it manually. It's so much easier now. They know all this stuff, electronic. We used to have to build spreadsheets and databases to track this stuff manually. It's a different time, sir. As we keep on rolling out into the vol ETPs, let's get out into everyone's favorite, maybe your least favorite. I don't know. It's kind of a polarizing product. This is SVIX 4820 right now, up about $1.70 on the week as VIX continues to erode. Doing some paper out there right now, 5,500 contracts. It's not going to sound like a lot. We just talked about hundreds of thousands. But for this product, it's actually a lot. The ADV is also going up, going in the right direction. 5,200 now, up 800 over the past week. So SVIX starting to slowly come on. It's been a long process. People thought this thing was going to be explosive right out of the gate. And on the volume front, not so much. The big dog position out there, we got the July expiring on the 5th. So next week, 46 half puts, 2,500 of those bad boys. And then let's go out to its sibling as well, because we are starting to come up against it. We got to have some time for the crystal ball. 540, down about half a point. 17,000 contracts on the tape in UVIX as well. So UVIX starting to come to life. The ADV is only 17,000, so it's already hit that, which is kind of interesting. That in and of itself is down 2,000 from this time last week. So a little bit of action out there. Matt, I know you're mostly focused on the European vol front. Do you spend any time watching the universe of volatility ETPs that trade around these products, sir?
It is interesting from the flows, right? And that's certainly something that we do keep an eye on, just to see, because for us it's always interesting when you get retail sometimes just sat on the other side from the professional market, right? And in Europe, particularly volatility products is very much a professionals markets, whereas you guys have the benefit of both sides. And I think that can be an interesting thing to see how on moments where the positioning is different from that side, certainly.
Mr. Rhoads, anything new for you on the SVIX front? I think you were out last we spoke to you. Are you like the Godfather? Did they pull you back in, sir?
Not yet, but I'm not short 2,500 of the 46 and a halves, but I am short some of the 46 and a halves that expire on July 12th. So might get back in that way.
I'm going to bring our buddy Jim Carroll back on the show, and he's going to wave his finger at both of you for having the temerity to sell puts in SVIX. That could be fun. Mr. Meatball, I know you've been up to that a little bit as well. What's the latest for you out there in SVIX? Are you ready to release your grand strategy yet?
I am not. I'm close, but I've got a pretty good system, I think, down on when to get out. So that, which is always the question, right? When do I want to get out of this thing? Because it's about to get steamrolled. Working on that. The piece I'm still working on is when to re-enter. But in a market like this, you would think SVIX would be up more because we literally are not moving.
Yeah, usually it's a good do heading into a truncated holiday week to have some of this in your back pocket. But today it's up, but it's not exactly explosive. UVXY continuing to go in the other direction, 23.1 down about 1.5 points from last week. 33,000 contracts on the tape. So UVXY took a hit post reverse split, which may surprise some folks. But, all these weird vestigial strikes and adjusted things, it kind of gums up the works for a lot of people out there. So that is sometimes the case. The ADV is 48,000. Got a long way to go to get there today. And that's down 2,000 on the week. Doesn't seem like we're going to hit it today. The big dog position out there in UVXY is a pre-split adjusted Jan 25s, I believe. 19,000 of those bad boys out there. And then round out the tape, VXX 10 3/4, down a little over half a point. 36,000 contracts on the tape today. The ADV is 50,000, down about 5,000. Man, how the mighty have fallen. VXX and UVXY hanging out at pretty much similar ADVs. It wasn't that long ago VXX was threatening and even usurping VIX some days, and no longer the case, listeners. As we keep on rolling, it's time to get difficult. It is time to get dangerous. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. Really quickly before we get there, I want to talk about we already paid off our question or our flash poll from earlier this week about the VIX calls. We also have a question of the week that's going away today, and it's just about seasonality. You said it's the start of summer, the weather is hot, realize vol is low. Which option strategies do you anticipate using the most during the traditionally quiet period until Labor Day? You're going to go buy some premium long calls, long puts, or verticals? You're going to go short puts, short calls, and all that sort of fun stuff? Are you going to go a little bit funkier? You're going to go the diagonals and the calendar route? Or are you going to do the infamous other? And it seemed like our folks were hanging out pretty much. It was a tie for a while there between calendars and short calls. Show me right now. I know there were some bids before for a long premium. I'm not sure why it's showing me none right now. Maybe something's weird with Twitter, but either way, short calls are taking it right now with about 55%. I should say short premium in general, taking it about 55% of the vote, which again, not surprising. It is the traditionally quiet summer period, so a lot of people like to hit the bid in those scenarios. And then we have calendars right behind it at close to 40%. And then a handful for others. It has no votes for long. That cannot be right, because I know there are some premium buyers out there, and vol is low, so you wouldn't be the craziest person if you decide you want to buy a little bit, put it in your back pocket for a rainy day. Either way, that's live right now. Ad options. Get in there. You got a few hours left. So if you're listening on the podcast, probably too late. But if you're listening to my voice right now, you still have time to make your voice heard. Speaking of making your voice heard, let's see how we did this week on the volatility front, listeners. I already said VSTOXX kind of smoked me. I think it smoked most of us out there right now. VIX coming in since the start of the show, obviously at 12.25 right now. By the way, where are we hanging out in the markets? We are hanging out right now. All the major indices have ticked modestly red, not a ton, listeners. So we are ticking into slightly in the red. So it looks like a gentle drift lower to end the week heading into the holiday. VIX at 12.25. I was at 12.75, so I was exactly a half a point off. VSTOXX, you said, closed at 18.31. I was at 16 double. I was feeling VSTOXX coming in as well. So no joy for me there. Mr. Meatball, you were at a 1331, palindromically appropriate, so no joy for you. VSTOXX 1551, so no joy there. Russell 1290, you're even higher than I was, and VSTOXX 1623. So man, this was a hard one. And then our guest last week, we had Mr. Mike on. He was at a 14 even on VIX and a 15 half on VSTOXX. So pretty much no joy across the board this week. This was a tough one, especially with that spread really diverging. I didn't have that on my dance card this week between VSTOXX and VIX. All that a long way around, Matt, to saying no one won this week, so you get the dubious honor of going first. Hopefully they prepared you ahead of the show. I'll spare you if you don't want to go the VIX route. I understand if you want to just go VSTOXX, but what are you feeling for this time? Actually, no show next week, so let's go out. This makes it doubly challenging. You picked a good one. You have to go out 2 weeks now, Matt. Where do you think VSTOXX will be in a whopping 2 weeks, sir?
I think people stay nervous, so I would actually see a tick higher. I'd go for 19.
19 even, given the way that's playing out. I can't say I hate more vol on the VSTOXX front. That's certainly the case. Let's see, who was next? We're all over the place. Let's just go to Russell next. Mr. Rhoads, sir, what are you feeling for this time in 2 weeks for VIX and VSTOXX, sir?
1925 on VIX. We are going to be in the first week of earnings season, so maybe we get a little bump there. And goodness gracious, I'm going to say 15.5 on VSTOXX. I think it'll continue to come. It'll come back down. It got to the low 20s this past week, but I think as some of the known unknowns get behind us over in Europe, that it'll start to creep down a bit, but probably stay at a premium relative to VIX for a while.
Did you say 13.25 for VIX? Is that what you said?
That's close enough. I think I said 13.20 something or other, but yeah, 13.25 is good.
Okay, 13.25. There you go. Mr. Meatball, sir, what palindromic nonsense do you have in store for us this week?
All right, so we've got 13.25. What was the first one?
Matt went 19 even on VSTOXX.
Okay, so we're open. I'm going to go 12.21.
Ah, yes.
And for VSTOXX, I'm going to go 20.02.
Oh, interesting. A little bit of a tick north there. Listen, I could certainly see it. We did flirt with it, as Mr. Rhoads said not too long ago. So intriguing stuff. Listen, yeah, this is an interesting one. Obviously, truncated session next week. We are obviously open on Friday, but closed on Thursday. No shows on Friday, so 2 weeks from now is where we are guessing, listeners. And coming into that, we will have maybe some earnings back on the docket or in the radar. Maybe we'll have some flummox on the domestic political front here that will add a little bit of juice out there. Traditionally, early to mid-July, not exactly a banger. Oh, man. So you know what? 2 weeks, I'm going to say, we got Meatball already at 12.20. I was thinking a little bit lower. I don't want to go to 11 handle, though. 11 handle, if I speak it into fruition, listeners, it will come to pass. So, and then that will make the Rock Lobster profitable on his 11 puts. We can't have that. So instead, I'm going to say we get a little bit of a weird catalyst, an unexpected catalyst that bumps us up a little bit. We get up to 12.55, 12 double in VIX. And then on the VSTOXX front, now we're getting challenging, listeners. Now we got to thread that needle. Oh, man, the spread is all over the place. I'm going to say we're at I'm going to say 1862 for this time. Again, 2 weeks from now, listeners. That's going to be a challenge, hitting that bullseye. All right. That music means we have survived another week on the volatility front. No oddities after this show, listeners. I have to get the heck out of Dodge on a plane. Looks like Chad asking their hope I make my flight. Yeah, it's supposed to be the busiest day in TSA history today, apparently. So that's a good time to be traveling. So I got to get the heck out of Dodge right after the show, pretty much. But before we go, Mr. Matt, sir, if folks want to learn more about all things VSTOXX, where should they go? What should they do?
They can certainly reach out to any other representative in the States or Eurex.com, EUREX.com. We are there. Everything is there, and you'll find people's contacts too.
There you go. Eurex.com, EUREX.com, the place to go to kick the tires and light the fires. Check out all that market data we've been talking about here, maybe some analytics, all sorts of fun. Eurex.com, the place to go. And Mr. Rhoads, where should they go if they want to keep up on all your research on VIX, VSTOXX, and everything else, sir?
Twitter. Anytime I do anything, I put it out there on Twitter. I'm getting ready to tweet a link to a webcast I'm doing in a couple of weeks based on a bunch of work that I did with some undergrads this past school year looking at does it make sense to follow block option trades? The short answer is no. But there's a lot more to it than that. And paper should be coming out early next week based on all of that work as well.
We always say the size money, not always, even not often, the smart money on the network. So intriguing stuff to be found there. We'll keep an eye on that. Maybe we'll go deeper on that when Mr. Rhoads releases that. And Mr. Meatball, last but not least, sir, rumor has it you've got a fun shindig coming up in Chi-Town in a few weeks. Where should folks go if they want to learn more?
Yeah, no, they'll be posted in the show notes. You can join me, Mark Longo, Russell Rhoads, and Mike Tusa amongst Andrew the Rock Lobster in Chicago. Just give my team a call, 888-872-3301. Tell them you heard about it, and we'll have a special price for you.
There you go. Check them out. Optionpit.com is the place to go. I'm looking here. Our chat's all over the place, which is kind of fun. We got some 15 handles, 17 3/4, 14 3/4, 13 handles. Man, they're all over the place, which again makes the market. It is 2 weeks after all, so I get it. If you're listening on the podcast, get your predictions in for 2 weeks, listeners. And if you get within our margin of victory, you too can win fabulous prizes. That's going to do it for us on the network this week. Hope you had a good trading week. Remember, next week, truncated holiday week, we'll be back for the shows on Monday, then off for the live shows throughout the rest of the week. Don't worry, all you on-demand folks, you'll be getting some stuff hitting you throughout the week. So no Vol Views live next Friday. Back again in 2 weeks, another episode of Volatility Views. Stay safe out there, everybody.
The International Volatility segment is brought to you by Eurex, home of VSTOXX, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobobble, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European Volatility Benchmark, at www.eurex.com/VSTOXX. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.